Hello everyone and welcome to the Monday Open hosted by the Vantage private client team. My name is Ollie and joining me today we've got Steve. How you doing, Steve?
I'm good, Ollie. What about yourself?
Doing very well, thanks, mate. Honestly, a great weekend. I'm very sad to see the Matildas drop down against Japan, but fair play to them.
That was an extraordinary goal, to be honest.
Don't know what happened there. But anyway, moving into the video ahead. So on your screen, you guys will see the agenda. I won't go through all the details on there. It all is very familiar for our returning viewers here. But just want to reiterate to everybody as well that anything we discuss in this video is all general in nature and doesn't take into account your circumstances. Any projections Steve or I give are not guaranteed, and past performance is not always a reliable indicator for future performance. So moving into our top 10 traded products for last week, quite surprised we actually don't have a few more oil markets in there. And we've also got the resurgence of silver, but otherwise not too many surprises.
Yeah, I mean, especially with last week we had all pairings pretty much. So we've only really got the cash CFD with Brent. So looking at last week, we did have a lot of decisions when it comes to central banks. So all pretty much as expected. We'll just highlight and just focus on the key ones. Locally, we saw the Aussie. So the RBA hiked by 25 basis points. It was a 5-4 vote. Due to really inflation concerns. It was quite funny that also Sunrise Natbar called out Treasurer Jim Chalmers around the government spending leading to inflation. So I thought that was quite surprising. But also with the decision, Michelle Bullock mentioned the R word, so recession. But even speaking to a client last week, there's a potential for stagflation. We saw that also unemployment rose during the week to 4.3%, with the participation rate climbed to 66.9, as well as the sort of beat with the employment. But it really showed these sort of offsets. So the full-time jobs fell by 30,500, while there was an increase in part-time to 79,400. So that essentially was stronger for the Aussie, considering that there was that sort of expectations around the hawkishness around the RBA, which led to a bit of a rally when it comes to the Aussie, but did drop as soon as they announced, which looked more like a liquidity grab, if anything. We also saw the BOJ, so Bank of Japan policy rate. So we saw Governor Ueda say that the BOJ board was somewhat more focused on the upside risks due to inflation, and just with the downside risks to growth from the conflict, keeping alive market expectations for near-term rate hikes. So BOJ overall sentiment seen as hawkish, which led to also strength in yen throughout the week. But a lot of everything was really focused on the US. So we saw before the US, the Fed's rate being on hold. We saw the decision before that. We actually saw gold drop dramatically from 5,000 to about, I think, 4,600 USD during that sort of time. So just before, I know you probably will have not been up, Ollie, at that time, but I saw it was closer to probably just before the sort of US market open. The Fed held rates with only Stephen Moran dissenting for 25 basis points with the ease, while Chris Wallafer, who previously dissented, went with the majority. A lot of it was around projected high inflation with March data, Powell admitting that the Fed just doesn't know how large or how lasting the inflationary pressure of the new tariffs as well as ongoing war with Iran will be. So this actually led to the US dollar strength, which has also seen gold weekly drop to the highest since 1983. So well before you were born, Ollie. Only a few years before I was born, but it was about 11%, so drop. So especially also adding to that was the latest inflation. So producer price index showing much higher inflation. So yeah, quite a lot to digest. The US-Iran war. There hasn't really been too many sort of updates. What are your thoughts on all of what happened last week? Any other sort of central bank decisions, Ollie?
Well, the only one I wanted to touch on was the Bank of England, which they did have a unanimous vote for the first time since February 2025. So they were all in favour of holding rates. I think that shows where they're sitting right now. Focuses on inflation in the UK. Previously, they were talking about the easing cycle. I think that's more or less gone out the window for the near term at least. So it'll be interesting to see how that plays on. Also, I'm definitely keeping my eye on updates in the US and Iran war overnight. I believe Trump put a deadline on Iran to open up the strait. I think it's by market open in the US time. Don't 100% quote me on that one, but interested to see how the day plays out ahead. But
Yes.
moving into
Spot
the
on
week.
with that. You sound a bit like a boxing commentator when it comes to the unanimous decision, but yeah, it is actually today when it comes to US time around D-Day. So we'll see whether we'll see what Trump does, whether he's actually going to act. We know that yeah, there could be one of those where it's all talk. So we'll just wait and see.
Could see
But
some
this week.
narcos in there.
Yeah. We'll also say with this week, so a lot of it is going to be really around the US Iran sort of conflict. But locally, we're also going to see the consumer price index. So it'll be good to see how that plays into effect because we do have no April meeting when it comes to the RBA. So the next will be May. We're expecting, I guess, with May so far with the big falls that there's at least two banks expecting a May interest rate hike. So we'll see with that. A lot of the sort of PMIs as well coming out of not only Australia but also the Euro, Germany, UK. The UK also has the inflation as well as retail sales. It'll be interesting to see with a lot of that sort of data points and see whether the inflation is a concern as well as how a lot of the businesses are actually holding up. So expect that to really drive a bit of the movement within local currencies. But a lot of it's really going to be on the US as well. So the continuous sort of jobless claims, so initial as well as continuing, as well as the PMIs to see how the economy's kind of keeping up. But a lot of the sort of headlines will probably be again around the US-Iran conflict and just how long this is actually going to last, and that's seeing especially with today the movement on gold really dropped significantly. So a lot of activity just to start and bit volatile markets already.
Big time. And I'm interested to see how all the data releases this week actually shape price action, given that we are the week following a central bank decision across most of these countries. I'd be interested to see if it is quite reactionary or if we're seeing a bit of a continuation. But it's to be seen depending on how it all prints relative to the expectations. But I don't think that's a good shift in now to go to the technicals. So I will share my screen with everybody. So, looks like we've loaded up on here now. So, starting off, I wanted to talk about the Aussie against the US dollar, starting off on the weekly chart here. So, it's been quite well documented. The Aussie was hitting multi-month, multi-year highs as well against the US dollar over the previous weeks, previous months, that is. Been on a pretty strong uptrend since November up until pretty much recently, last 2 weeks. We actually did hit I think it was close to a 4-year high back towards the start of March, and then we had a pretty strong sell-off since. I'm looking at these previous 3 weeks, and I'm seeing pretty sizable top wicks on all three of these, which is telling me that despite the bullish trend, there is some selling pressure once we do hit around that 71 cent sort of level here. Looking on our indicators as well, can see that the MACD has converged a bit on towards its signal. So I'll be watching this one to see if we can see a crossover, potentially some divergence to add to the bearish pressure. As well, we've got the RSI below its signal, which adds further to the bearish momentum that we are seeing for the week so far. Otherwise, looking on here, I'm seeing the prices are quite overextended past the moving averages. And we actually did start this week at the psychologically significant 70 cents level. So I'm interested to see for the week if we're going to look for a further pullback into its moving average levels, or if we're going to hold support around this area and then challenge or look for a retest of its swing highs. So moving now into the daily chart for the Aussie against the USD. As I said, we did start off the week at the pretty key level around 70 cents, and we've since traded down where we are currently sitting on the 50-day moving average. So historically, when we do look at the 50-day moving average, it is a level that prices do tend to react to. So for this area here, I'm looking to see if it'll hold as a support or if it's going to break lower and then trade further into the moving averages. If I'm a seller in this market, I want to see a break and hold below this level with a target towards the next moving averages. And I'll be looking to manage my risk around this psychologically significant price level. Furthermore, if I'm a buyer for this and I'm looking for a continuation of the longer term trend, I want to see this support hold. I want to see prices move higher, take out the highs of today already, and look for a retest of the Friday closing levels as well. A hold above there, I think we could see a move up to the moving averages. And then once I've got onto there, I'll be looking for an entry to target towards the swing highs. Adding to the bearish momentum, though, we do see the MACD is crossed below the signal and is looking towards that zero line, which would add further pressure. So for the moment, I am looking for a signal on either side to confirm momentum for the week ahead. Next off, I wanted to take a look at silver. So, as Steve mentioned, it's been quite well documented. The moves in gold over the previous months, as well as last week, having a pretty sizable sell off for its worst trading week since 1983. As you said, Steve, thank you very much. It is a bit before I was born. So, looking in historically to see what's going on for there. So, for the weekly chart now, it's been very well documented as well. Pretty strong uptrend. And we actually did hit the all time highs towards the end of January and have had a very strong sell off since. Last week or last Friday, we did close below our 20-week moving average for the first time in some time. I believe that's since March last year, about a year now. So I do think it is quite significant in the momentum for the week ahead. I'm seeing since the sell-off, I'm seeing a sequence of lower highs alongside some lower lows, or I'm looking for a confirmation of this lower low to confirm the bearish momentum. Seeing on the MACD, we have seen a cross below its signal line and seeing some pretty good divergence in here too, which is telling me that there is some momentum going on for the bearish trend here. And it's also supported by our RSI. So moving now into the daily chart, get an idea of what we could be looking to expect, and also as well as some signals to confirm our momentum here. So as I mentioned before, we have recently been seeing a sequence of the lower highs alongside lower lows and a break below this level here, which actually is on our 200-day moving average around the 63.1 sort of level, would add to the continuation of that. So if I am a seller, I would like to see a break and hold below these levels here. And a close below there as well, with an entry to target further down, potentially back to our previous resistance levels from late last year. Furthermore, though, if I am a buyer in the market, I want to see the support price hold here, first of all, and I would like to see then a break above the highs from today already with a target towards key moving average levels. Adding to the bearish pressure, we're seeing the crossover on our moving averages, be it being the 20-day moving average over the 50. So if we do see this one move lower and cross over the 100-day, I think it will add further to the bearish momentum. So it's definitely a wait and see to see how we go along with those ones. So I think that brings me to the end of the technicals now. So moving into the Q&A section where Steve and I will answer some of your guys' most commonly asked questions from last week.
Yeah, so question one, what factors can cause natural gas and oil prices not to correlate? So recently, especially with the US-Iran conflict, a lot of the questions is just around basically natural gas not following oil, and just wanted to highlight a few general sort of themes. Basically, oil is mainly used for transportation fuels, so gasoline, diesel, jet fuel, and petrol, which is obviously used for cars as well as planes. But natural gas is primarily used for electricity generation, heating, and industrial processes. So natural gas is actually based off seasonal demand. US has officially come out of winter last week and has actually started spring, while oil is also required all year round, and thus comes down to really the demand and supply. So that's really the driver why why sometimes it doesn't correlate. It's really around that sort of supply and demand, and hopefully that answers that particular question.
Thank you. And I'll take for question two. So, question is, what are candle wicks and what can it represent? So, I'll be referring back to the AUD USD chart I just had on there on the weekly to refer to this one. So, candle wicks in trading represent the highest and lowest prices reached during a specific time frame relative to the open and closing range for a particular time frame for a market. In this, the wicks can signify price rejection, can signify volatility, and it can give an indication for potential reversals in the case of long wicks or trend continuation in the context for short wicks. So a long top wick indicates selling pressure as the price is pushed higher, which can suggest a potential downward reversal, while a long bottom wick can show that the potential support levels where the dip buyers will look to take over. Obviously, we'll take it all into context for how a trading session can go, but as a rule of thumb, that is generally how they will look. All right, so that brings us to the end of the video today. So a recording of this will be uploaded on YouTube once we have concluded. As well, we will be uploading a link to this one in our VIP chat room as well as on Telegram. As usual, for anyone who's looking to get involved with the Monday Open and send through any questions to us, please feel free to do so in our VIP chat room or send them to your relationship manager directly. And then that's all from me now. So thank you everybody for watching, and Steve, I'll see you later.
Thank you, Ellie, and have a great evening, everyone.